legendary Bitcoin, hamster trading, and a whole bunch of things that somehow keep making entrepreneurs millions, sometimes even billions. All of that is crypto. And I'm Daria, and this is Garant Business Consultancy. Today we are diving into how to launch a crypto company in Dubai, how much money you'll need to get started, and most importantly, how to build a real, legal, and strategic business in the UAE that actually works. Welcome to the next level. Saying I work in crypto has basically become the default answer to "so what do you do?" But the truth is, crypto stopped being about memes, NFTs, and Telegram channels a long time ago. It's now a full-fledged market with real rules, taxes, and high stakes, especially if you are building business in Dubai. You are creating crypto-related products or services, exchanges, wallets, tokens, platforms. People are trading, investing, transferring, and you are building an ecosystem and earning from it. But just slapping the word crypto on your logo doesn't cut it anymore. In the UAE, you are entering a serious system with licenses, banks, regulators, and strict compliance. If you don't understand how it works, you risk burning tens of thousands of dollars and ending up with nothing. Though at least you'll be able to say you used to work in crypto. Our goal is to make sure you don't just say it, but actually profit from it. So let's break it all down, from common mistakes to smart strategies and step-by-step actions. Let's start with the hottest question. How much does it actually cost to enter the crypto business in Dubai? Let's do the math together. First, registering a crypto company. That's a minimum of 50,000 dirhams. Second, a crypto activity license. Depending on the zone and the business model, you will need another 30,000 or 80,000 dirhams. Next, a mandatory compliance officer. And no, this is not just a lawyer. This is the person who is legally responsible to the regulator for everything your company does. And you need it. Add to that a physical office, residency visa costs for the founder, legal support, audit services, and platforms that help you stay compliant with AML and KYC regulations. But now we hit to the biggest wall, opening a bank account. And let's be honest, in the UAE, that's extremely hard and very risky. To even have a chance at getting a corporate account approved, you basically need a miracle. Or you need something just slightly more realistic, an outstanding and unique business model, a globally recognized platform like Binance or Coinbase, a public track record, and a clear, predictable revenue stream. If you check all those boxes, you might hear a yes from the bank. Still, odds are below 50%. There is a workaround though. Opening an account outside the UAE in any crypto-friendly bank that allows non-residents to apply. So this is your basic starter pack if you want to legally operate with a crypto license in the UAE. The final number? Anywhere from $32,000 to $40,000 just to get in. Too much? Well, you decide. That's 1,000 Big Macs in Dubai, half a year at Harvard, 20 nights at the Burj Al Arab, or a legal crypto license with access to global banking system. I think you got it. But now let's move on to what really matters. Because so far we've just talked about the money and we are still stuck in the "I've kinda heard about this crypto thing" zone. Got the money? Great. But if you want in the crypto business in Dubai, get ready for an interrogation, a voluntary one. It's called a compliance audit. You will need to prove that your project ticks all the boxes. Only then you will get a license. They check everything. Your corporate structure, who owns what, and where your company is based. The exact type of crypto activity, custody, tokens, exchange. Do you have KYC procedures in place? How do you monitor suspicious transactions? They will look closely at your cybersecurity setup, financial model, business plan, and overall compliance strategy. Where does your funding come from? Can you legally justify your revenue? How do you report and file everything? Don't forget about your team. Who does what, and are they qualified enough to do it? And yes, they will definitely check whether you are applying in a free zone that actually allows crypto, and we will get into this later. On average, the process takes 2 to 3 months and some solid nerves. But if you want to pass the audit faster and with confidence, our contacts are in the description, just to reach out. We've got your back, because from here on it gets even tougher. More details, more rules. Everything I just mentioned is monitored by actual regulators. Let's meet them. Regulators are the government bodies that make the rules and make sure crypto companies follow them. Well, what did you expect? More opportunities come with more responsibility. The UAE actively supports crypto businesses, but expects full compliance in return. In fact, the government is actively promoting its own Web3 initiatives. Emirates Airlines, for example, plans to accept cryptocurrency as a payment method starting in 2026. But back to our crypto regulators. The control system operates on 3 levels. First level, federal. This includes the Central Bank and the Securities and Commodities Authority, SCA. These are essential for businesses involved in any kind of payment operations. Second level, free economic zones. Each zone has its own rules and can offer businesses certain advantages, foreign investment incentives, offshore benefits, simplified visa procedures, and even more. One of the most popular zones is the DMCC Crypto Center, home to over 650 crypto companies, including Bitcoin.com and Crypto.com. It's built for scaling startups, offering accelerators, co-working spaces, and special tax benefits. Third level, specialized financial hubs. Outside the free zones, there is VARA, the Virtual Assets Regulatory Authority. VARA defines licensing frameworks for crypto exchanges, custody services, brokers, and digital asset managers. For example, Mantra DeFi was the first platform to get licensed by VARA in Dubai, and its token value shot up by 56,000%. Another important jurisdiction is DIFC, Dubai International Financial Center, a globally recognized financial hub with its own regulator, DFSA. DFSA oversees financial services and virtual assets. In fact, in the past year alone, total fines exceeded $2.5 million. Still, the initial application fee here is one of the most affordable, starting at $15,000. There is a similar setup in ADGM, Abu Dhabi Global Market. It's a financial hub too and offers a full range of crypto licenses. It's especially popular among large international players working at institutional level. In 2024, Zodia Markets, a crypto firm backed by major banks, joined the zone. And that's not all. There are more regulators and zones out there. But here's the truth. You don't have to pick them all. You do need to know which one officially allows your specific type of crypto business. Once you define your product, the right regulator will find you and let you know exactly what rules you need to follow. Of course, you can't just offer anything at once. Getting a driving license for a sedan doesn't give you the right to operate a bulldozer. Same goes for crypto licenses. I think by now you've realized, even with virtual money, there are more than just 1 or 2 ways to operate. Now multiply that by the number of available zones, and you will get around 100 possible licensing combinations. But don't worry, it all boils down to a simple structure. With the rare exceptions, Dubai follows a basic principle: one action with an asset, one license. VARA defines 8 core categories. If your business provides advice on investments or crypto operations, that's advisory. Connecting buyers and sellers, then you need a broker-dealer license. Running a platform where users buy and sell assets themselves, there is an exchange. Holding client assets, you will need a custody license as a separate legal entity. Lending or borrowing in crypto, you need the appropriate license. Managing a client's portfolio, that falls under management and investment. Facilitating transfers or transactions between users, you are in transfer and settlement. And if you are issuing your own token, that's VA issuance. Sounds complicated, but the structure is pretty intuitive. Every type of service requires its own license. Other regulators follow a similar pattern. For instance, ADGM and DFC require licenses in these same areas, though with their own compliance, security, and capital requirements. Because in the end, there is always a common denominator. In fact, there are just 4 core types of regulated activity on a crypto exchange. Let's break those down next. The first category covers everything related to e-wallets, settlements, and virtual currency trading. This is the most tightly controlled area because it's essentially a central bank level license granting access to financial operations. That's why the requirements are so strict. You will need a minimum share capital of 15 million dirhams and at least 1 year of experience in the crypto market. A strong risk management system, robust IE security, and technological controls are mandatory. There is no physical client interaction and user data must be stored within the UAE. A commonly overlooked requirement, a non-revocable bank guarantee, either 100% of the capital or 5% of the company's public float, whichever is greater. So no, it's not just a wallet. It's a fully regulated financial institution with a major capital, real oversight, and a key role in the digital economy of the future. The second direction is a bit simpler. You are stepping into an existing system and managing other people's assets. This is known as brokerage. A brokerage model is born when one side understands the market and the other wants to earn without diving into technical complexities. To launch a brokerage, you must prove your company's reliability and financial stability. In other words, pass due diligence. You will need to inject at least 400,000 dirhams in capital and open a physical office in the Emirates. Qualified staff is a must. As of 2024, VARA also requires at least one independent director on board and implementation of best execution systems to protect clients. Don't confuse this with traditional brokerage. You are entering a platform where trust and security are paramount. Be prepared to rigorously protect your clients' interests and demonstrate that you can deliver bulletproof safety. Third on our list, crypto funds and collective investment. You raise capital from crypto investors and channel it into futures, stocks, real estate, and tokenized assets. Licenses can be obtained either through the Department of Economic Development or within free zones like DFC and the DGM, which offer tailored regimes for asset management or collective investment funds. Crypto fund structures vary. A public fund operates openly and requires a registered prospectus. A fund for qualified investors targets those who fully understand the risks. A hedge fund manages crypto assets under a trust model with fixed fees or profit sharing. A closed fund limits who can participate. This business model is gaining traction fast. In just the first half of 2024, the number of funds in ADGM grew by 32% and assets under management rose by 226%. Launching a crypto fund opens access to global markets and professional investors. If you comply with local regulations, you can build a transparent and powerful asset management structure. The final regulated area, security tokens, specifically the issuance of crypto assets through ICOs. In other words, a project offers investors the opportunity to buy tokens before the full launch of its platform or product. To do this, you must obtain an issuer's permit. It's granted based on the review of your business plan and risk management framework. Issuers must demonstrate financial stability, ensure the token's independence from fiat currencies, and provide a platform for token distribution. In 2025, the UAE Securities and Commodities Authority launched consultations on a new regulatory framework for security tokens and commodity token contracts, a major step towards establishing a clear and consistent federal-level regime for token issuance and trading in the UAE. Now you've met the regulators, the licenses, and the key crypto sectors under control. I did warn you, it's a lot to take in. So let's clear things up by looking at the most common mistakes people make when starting a crypto businesses. And the most common problem is banks. Many crypto companies in the UAE face the same challenge. Banks often refuse to open accounts for crypto-related businesses. Banks require detailed documentation, a full description of tokenomics, a white paper, contracts, and proof of funds origin. And the label crypto-related is not at all the same as bank-approved. For example, Emirates NBD closed an account because of crypto income, even with full transparency. Deposits from IFSA companies with crypto in their activity are often blocked. Account closures without explanation are in common occurrence. Moreover, many founders come unprepared for banking interviews, They can't clearly explain their business model, risk management system, or AML KYC compliance procedures. Attempts to hide crypto involvement are perceived as deception, which leads to refusal or bank blocking. Besides banking issues, there are other common mistakes. For instance, setting up a company in cheaper zones like IFSA or Maidan can be just formality. The license won't grant rights to custody crypto, conduct ICOs, or perform crypto operations. Also, don't expect Vara to be a cure-all. It operates outside free zones and it's comprehensive but doesn't cover every operation or business model. Many also stumble on the Web3 license, misunderstanding its scope. This license covers activities related to Web3 technologies, blockchain, NFTs, decentralized apps, metaverses, and so on. But it doesn't authorize holding cryptocurrencies or accepting them as payment. To avoid these problems, we recommend choosing the right jurisdiction. For example, ADGM or DFC for security tokens, VARA for Web3. Obtaining the license that matches your services, preparing a full document package, and working out a banking system strategy in advance, including backup options. Also, you can check out our other videos where we thoroughly cover how to open a company in ADGM in DFC zones with specific timelines and step-by-step guidance. Jurisdiction, licensing, documentation, and open communication with the bank, all this works as a single mechanism. Only this way you can set up a crypto businesses in the UAE legally, reliably, and without unexpected account blocks. Congratulations on making it through this challenging journey and now knowing almost everything you need to start a crypto business in Dubai. But if you want to learn even more details and understand this field like Vara does, be sure to subscribe our channel and hit the like button. Our contacts are always in the description, so we can answer any questions and provide consulting tailored specifically to your situation. This was Daria with Garant Business Consultancy. See you soon.